Joining us now is Eddie Ghabour, co-owner of Key Advisors Group, LLC. Eddie, so great to have you on the show. What concessions do you think are taking so long for this deal?
You know, this deal has been complicated from the start. There's been many times that our markets were expecting some type of deal and then you see a pause. And so I'm not going to get too excited until we actually see this agreement signed, but more importantly, what's actually in the deal. I think it's huge for the global economy and for our markets in order for it to march forward and continue to hit new highs is to really see what's in phase one. What the market needs to see is that the tariffs are not going to escalate. So if you get a signature on the line here on phase one and it shows as if they're moving in the right direction, that's going to be very positive for the equity markets. But if it starts to escalate where our administration says they're going to continue to escalate the tariffs that are supposed to go into effect in December, you know, you'll definitely, in my opinion, see a pullback here based off where we are in the capital markets.
Okay, Eddie, so it sounds like obviously right, a no-brainer. The market wants a trade deal. Now, if December comes around and we don't have a trade deal and more tariffs do go into effect mid-December, especially on those tech items, right, in the all-important holiday season, explain more the potential fallout that could be in store.
So I think that the fallout could be really big as far as I would expect the double-digit drops in the equity markets, because I think right now the market is pricing in some type of trade deal. You can see whereas we're hitting all-time highs right now, there's some complacency right now in the marketplace. And one thing the market does not like, as we saw last year around this time, is a surprise. And it would be a surprise to the market if there's not some closure on this phase one. So I'm telling investors right now is don't be too complacent. If you've had a lot of gains this year, don't be afraid to rebalance and take some off the table and wait and see what happens. And so right now, I think a little bit of caution is warranted because of the fact of how big of a year investors have had. And I just don't want to see the market get whipsawed with some type of surprise event.
Eddie, thinking long term, what is your timeline right now for the possibility of an actual trade deal between the U.S. and China happening before the 2020 election?
I don't see any way how we get an overall comprehensive trade deal before the election. When you think about it, we're 12 months away from an election, and if I'm in the Chinese seat right now, they have no incentive to rush and sign anything because they can be patient and wait and see what happens with the U.S. elections. And I think that's probably the stance they're going to take. So I think you'll probably get phase one signed at some point in time. Again, I think the important part of phase one is there actually any substance to it? And what's the tariffs going to look like? But as far as an overall comprehensive trade deal, I personally don't believe that's going to happen before the presidential election next year.
Well, look, former U.S. Treasury Secretary Larry Summers seems to agree with you, Eddie. He said that he doesn't think we're just one signing ceremony away from actually getting this thing done. I want to turn our attention, though, now to what is happening abroad. And France's economy actually seeming to be the stalwart, right, or the bright spot in the overall Euro area economy. Explain what you're seeing there and what this could portend for growth in the region.
So it's pretty interesting, right? Because we always look at Germany as the place that has growth and solid ground economically. And now when you take a look at France, you know, some of the corporate tax cuts that they've put in has seemed to really encourage growth. Unemployment is starting, and employment and jobs are really starting to grow. So they're really starting to accelerate upward, and it looks like they may have possibly bottomed here in the short term. And look, the fact of the matter is we are a global economy, like it or not, and having other countries grow is good for everybody. So I hope this momentum continues for them because, as you know, when you start to see countries grow and there's trade amongst other countries, that's good for everybody because right now Germany has definitely slowed down and possibly heading into a recession. And so seeing other countries other than the U.S. do well is a good thing, and hopefully will spur more growth and that will spread to other countries. So you could start to see some nice upside potentially in international markets. As an investor, being diversified in that space I think is important because the U.S. has definitely been the leader over the last several years and everything generally reverts to the mean. And so having some international exposure and being diversified, in my opinion, I think could bring some nice returns for you potentially next year over the next 12 months.
Eddie Ghabour, co-owner of Key Advisors Group, LLC. Always good to see you. Thanks for joining us this morning.
Thank you so much for having me.